Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about Euro USD because at the moment we do have quite interesting price action and structure. Now, as usual, to keep the video as educational as possible, first I will be covering the technical side of this market. Then we will move to the order flow. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that from a monthly perspective, we are clearly testing a very strong level of previous monthly support. In fact, from here, all this move to the upside was created, which is now turned resistance. Now, what is important to keep in mind is that even though this is previous monthly support and resistance, and we could expect some short-term bearish price action away from this zone, if we look left, we can see how this green candle here that was acting as previous monthly support has now been once again broken to the upside, meaning that this previous support is now once again acting as support here. So even though we could expect some bearish price action, we could simply expect a retest of this previous monthly support, which is now again support, from which we could then get a rejection higher. So from a monthly perspective, it seems like we could get short-term bearish price action and then longer-term bullish continuation. Dropping down on the weekly time frame, what do we have? Now, from a weekly perspective, we can see how already twice the market went and retested exactly the previous weekly resistance turned support. From here, this rejection lower was created, meaning that this was previous weekly resistance that got broken to the upside with this candle. At that point, this previous resistance became support here. Again, here, this previous resistance was turned support here. The market tested its zone and rejected it to the upside. So at this point, what we could actually expect is another retest of this previous weekly resistance turned support, which is a new level that the market has just broken to the upside, which is this previous high, which we could expect the market here to go and test and then potentially to reject to the upside, which is, by the way, exactly what we already wanted to see by looking at the monthly time frame, because on the monthly we said that we wanted to see short-term bearish price action and then longer-term bullish continuation. Well, if that happens from a weekly perspective, it would translate into a retest of this previous weekly resistance turn support and then a rejection to the upside. Now, if we go down on the daily time frame, what do we see? Now, here on the daily, here is where things start getting quite interesting. In fact, what we can see is that the market at the moment is testing exactly the previous high. Now, as it is testing the previous high, what we could expect is the potential creation of a double top. If from here the market will simply continue higher, at the moment there is nothing really interesting because the best probabilities in the market come when all time frames are showing the same direction. We have already seen how monthly and weekly indicate short-term bearish price and then a price action and then longer-term bullish continuation. This means that only if also on the daily time frame the creation of some short-term bearish price action would create an interesting pattern, only at that point things would really be interesting because we would have all time frames showing the same thing. And in this case, actually on the daily, if the market actually creates this move to the downside, we would have the creation of an M pattern. And after the creation of an M pattern, what we could expect is a potential rejection to the upside for the completion of the M pattern at the neckline, which is the previous support turn resistance. And this correlates perfectly with what we have already seen on the monthly and weekly. In fact, if we get this move to the downside, at that point, we would have very good probabilities of a rejection to the upside, rejecting that previous monthly resistance turn support and that previous weekly resistance turn support. So a rejection to the downside would create the possibility of a potential longing opportunity for the completion of this M pattern at the neckline. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data for the euro, what we can see is that with the last reports, we had a huge increase in the net positions. We went from minus 47k net positions all the way up to plus 126k net positions. Now, this positioning, the COT data, is just the data of the non-commercials, which are essentially institutions and hedge funds, which are just in the market to make money. And they went from having way more shorts than longs to now having way more longs than shorts, with 228k longs compared to only 101k shorts. This indicates that Euro USD is getting very bullish. So if we will have the creation of this M pattern, at that point, things will get very interesting because there is a very good probability for the potential completion of this M pattern. So if we do get this move to the downside, how we could be approaching this potential longing opportunity. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the market to complete this M pattern at the neckline. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here past the testimonials, you will see that at the moment I'm running a special promotion in which you have a huge upfront discount on the lifetime access price of the mentorship program from $497 all the way down to $97. And since I have partnered with the forex broker Blueberry Markets, if you open an account from your student dashboard after you joined, you can get a full refund credited back into your trading account. And if you scroll lower here, you will see that there is still time to join before the timer goes to 0 and the offer expires. However, spots are limited, so if they get filled before the timer goes to 0, the offer will end anyway. So I really suggest that you join directly from here in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.